Ever wondered what NSE and BSE are in the stock market? Well, you're in for a treat, because we're about to demystify these acronyms and delve into the captivating world of the stock market. Imagine a bustling marketplace, but instead of fruits, vegetables, or clothes, people are buying and selling shares of companies. That, in essence, is the stock market. It's a public market for trading company stocks and derivatives at an agreed price. It's a meeting point for buyers and sellers to trade stocks, which represent ownership in businesses. But why is it so important? The stock market plays a crucial role in the health of an economy. It gives companies the ability to raise money to grow and expand. When a company issues stocks, it's essentially selling a part of itself to public investors. The money it gets from these sales can be used to fund new projects, create jobs, or even reduce debt. On the other side, it provides investors, both big and small, an opportunity to own a piece of these businesses. When you buy a stock, you're buying a slice of that company's future profits. So, if the company does well, so do you. Now let's talk about NSE and BSE. These are the major stock exchanges in India. NSE stands for National Stock Exchange and BSE stands for Bombay Stock Exchange. They are the platforms where the buying and selling of stocks take place, sort of like the physical marketplace we imagined earlier. These exchanges ensure that trades are carried out in a fair and orderly manner, and they provide the facilities needed to conduct these trades. The stock market, with its intricate web of buyers, sellers, and businesses, all interacting in real time, is a fascinating spectacle. And NSE and BSE are integral parts of this spectacle, providing the stage where all the action happens. So sit back and relax as we unveil the mystery of NSE and BSE. Now, let's dive into the world of NSE, the National Stock Exchange. The National Stock Exchange, colloquially known as NSE, is one of India's leading stock exchanges, and it plays a pivotal role in the Indian financial market ecosystem. This powerhouse was established in the year 1992 with a vision to bring about transparency and efficiency in the Indian capital market. It was the first exchange in India to provide a fully automated screen-based electronic trading system, which offered easy trading facility to the investors spread across the length and breadth of the country. NSE provides a modern, fully automated, screen-based trading system with national reach. It operates on a robust platform known as the National Exchange for Automated Trading, or NEAT, which enables trading members to trade remotely from their offices. The system allows for a fair and transparent process where order matching is done by the computer, strictly on price-time priority. The types of securities traded on the NSE include equities, bonds, and derivatives. Equities are the most commonly traded security, representing ownership in a company. Bonds, on the other hand, represent a loan made by an investor to a borrower, typically corporate or governmental. Derivatives, the third type of security, are financial contracts that derive their value from an underlying asset or group of assets, like stocks or bonds. But why is NSE so important for investors? Well, it provides a platform where various buyers and sellers can negotiate prices for securities. It offers a transparent and regulated environment for transactions to occur, which helps in maintaining investors' trust. Moreover, NSE provides a platform to raise capital through the issue of new securities, thereby playing a crucial role in supporting the growth and development of the Indian economy. The National Stock Exchange also provides a variety of services like clearing and settlement services, trading services, indices, market data feeds, and education, among others. It's a one-stop shop for your investment needs, whether you're a seasoned trader or just starting out. NSE therefore provides a platform for trading in a variety of securities, making it a vital component of the Indian stock market. Moving on, let's explore the Bombay Stock Exchange, popularly known as BSE. Picture this. The year is 1875 and the city is bustling Mumbai. This is when the BSE was established, making it the first ever stock exchange in Asia and the 10th largest in the world. Its history is not just lengthy but also rich, with a journey that has seen the rise and fall of countless businesses and the creation of immense wealth. So what exactly is BSE? In essence, it's a marketplace where buyers and sellers come together to trade in various financial instruments. These include stocks, bonds, and derivatives. It's like a giant supermarket, but for securities. Now, you might wonder, what's the big deal about BSE? Well, it's more than just a marketplace. BSE plays a pivotal role in the Indian economy. It helps companies raise capital through the issue of shares and bonds. This capital is then used to fund business expansions, create jobs, and fuel economic growth. So in a way, every time you invest in a BSE-listed company, you're contributing to the Indian economy. Moreover, BSE provides a platform for investors to create wealth. It allows individuals and institutions to invest in a wide range of securities, offering opportunities for both short-term gains and long-term wealth creation. It's like a treasure chest where the right keys can unlock substantial riches. But that's not all. BSE is also a barometer of the Indian economy. Movements in its benchmark index, the Sensex, often reflect the mood of the economy. When the Sensex rises, it signals investor confidence and economic optimism. When it falls, it indicates caution or pessimism. So, next time you hear about the Sensex on the news, remember, it's more than just a number. BSE, being the oldest stock exchange in Asia, holds a significant place in the Indian as well as global financial market. Its contribution to economic development, wealth creation, and investor confidence makes it an institution of great importance. So, whether you're an investor, a business owner, or just a curious observer, understanding BSE is crucial to comprehend the dynamics of the financial world. You might now be wondering, what's the difference between NSE and BSE? Well, let's begin with market capitalization. The National Stock Exchange, or NSE, has a larger market capitalization compared to the Bombay Stock Exchange. Market capitalization refers to the total value of all a company's shares of stock. This means that the overall value of the shares traded on the NSE is higher than those on the BSE. Next, let's talk about the number of listed companies. The BSE, being the older of the two, boasts a larger number of listed companies. In fact, it's one of the world's leading exchanges in this regard. Meanwhile, the NSE, though younger, has made significant strides and hosts a substantial number of companies as well. Moving on to the indices, both exchanges have their benchmark indices. The NSE has the Nifty 50 and the BSE has the Sensex. The Nifty 50 represents the top 50 companies on the NSE, while the Sensex represents the top 30 companies on the BSE. These indices give investors an overall view of the market's performance. Lastly, let's look at global presence. The NSE has a wider global presence and recognition thanks to its heavy investment in technology and modern trading practices. It was the first exchange in India to provide a modern, fully automated, screen-based electronic trading system. This made it easier for more people to participate in the stock market. On the other hand, the BSE, despite being Asia's first stock exchange, has a more localized presence. So, to sum it up, the NSE has a larger market capitalization, fewer listed companies, its own benchmark index, and a wider global presence. The BSE, on the other hand, has a smaller market capitalization, more listed companies, its own benchmark index, and a more localized presence. So, while both NSE and BSE serve similar purposes, they do have their unique characteristics. Having explored NSE and BSE, it's time to wrap up our discussion. We've been on an enlightening journey delving into the heart of India's stock market. We've unpacked the complex world of the National Stock Exchange, also known as NSE, and the Bombay Stock Exchange, or BSE. We've discovered that these two entities are more than just marketplaces for buying and selling shares. They are institutions that drive the economic engine of our nation. The NSE, as we've learned, is the largest stock exchange in India, and it has brought about a paradigm shift in the Indian securities market by leveraging technology. On the other hand, the BSE, the oldest stock exchange in Asia, has been a pioneer in various areas, including the introduction of the Sensex, which has become a barometer for the Indian market. But why is understanding these two exchanges so important? Well, if you're planning on stepping into the world of stock market investment, these exchanges are your playground. They are the venues where you'll buy and sell shares, bonds, and other financial instruments. The more you understand about these exchanges, their operations, their indices, and the companies listed on them, the better equipped you'll be to make informed investment decisions. And remember, investing is not just about making quick money. It's about understanding the market, its trends, and its driving factors. It's about making informed decisions based on your understanding of these factors, and above all, it's about patience and perseverance. But don't let the complexities intimidate you. Just like any other skill, understanding the stock market is something that can be learned and mastered over time. So, take your time, do your research, and don't be afraid to ask questions. Remember, Understanding NSE and BSE is a stepping stone in your journey towards becoming a savvy investor. Happy investing!